I think we need to admit people in the meeting then. Good morning, everyone. We'll just wait for a few more people to join and we will be starting the meeting. Okay, as more people are joining, let's just kick off. Good morning, everyone. Welcome to this webinar. I am Pauline Miquel, Policy and Research Lead at CBAMBOO. I'm joined today by Gabriel Rozenberg, CEO and co-founder at CBAMBOO, and Dan Maleski, Lead CBAM Advisor at Redshaw Advisors. Good morning. I see more people are joining. We will just get started. The purpose of today's webinar is to explain exactly where CBAM is today, what uncertainties still exist in this regulation, and how businesses can navigate those uncertainties. Because CBAM starts in just 80 days' time, and there is so much that we still don't know, we will be asking, is it time to panic? We hope that by the end of this session, you will have a clear view of what you, as a business, can already do to minimize CBAM uncertainty. That in place of panic, you'll have a clear plan of action that you can put in place and make CBAM work for you. Before we start, I would just like to make a few housekeeping notes. We will have a Q&A session at the end for around 15 minutes. So please post your questions in the chat. We will address as many as we can, including some of the questions that you have submitted through the form at registration. Please also keep your camera and mic off unless you are asked to turn them on for questions where we might bring you in. If we don't get to your question, however, please feel free to message us on LinkedIn or reach out to us through hello@cbamboo.com. You can find our details on our website as well. We will be very happy to schedule a call. This session will be recorded, so we will share the slides and the recording of the event after. As for those who are not watching us live, because we know this week is very busy, we know LME week is taking place as well, please make sure to follow up with us and ask all the questions that we didn't manage to address if you want to do so. For those of you who are new to CBAMBOO, let me just introduce ourselves very quickly. We are a London-based company and we provide carbon intelligence for all the industries navigating CBAM. Our software platform helps companies track and manage their CBAM cost exposure by linking the carbon costs to every purchase and sale they make. We also publish a free monthly newsletter, which is available to all, and you can subscribe to it by scanning the QR code on this slide. It will also be available on our website. So let's maybe just dive in the content of today. We will start with a regulatory update, because in just 80 days, the carbon border adjustment mechanism of the European Union will effectively become a tax. Yet, several critical elements of the regulation are still missing. This lack of clarity is really creating confusion and concern for importers and traders. Every week, we also hear a new rumor about CBAM that gets put up on LinkedIn, and frequently it just turns out to be completely inaccurate. So let's just recap what we actually know, based at all times on the actual legislation and what the European Commission have actually said. To understand how CBAM costs will look in practice from next year, we really need to go back to the basics. The formula for calculating CBAM, as it is set out in the legislation and the Commission's guidance. The CBAM cost really starts with the carbon emissions of the imported products. So if you're an importer, then that's the supply chain data that you have been collecting for the past few years. as part of the transitional period. From that, we subtract something called the benchmark. It's basically a rate of emissions that matches the most efficient producers in the EU. That benchmark is then multiplied by a phase-in rate, which reflects the share of emissions that no longer receive the free allocations in the EU ETS, the EU's own carbon market. What all of that gives us is the amount of emissions that the EU actually says we should be paying for. So that number gets multiplied by the price of carbon in use in the EU, which is also called the EUA price. And then we deduct any non-EU carbon price that might have already been paid in the country of origin of the good. Now, if you put all of that together, you get your CBAM cost. So once we understand these 5 variables, this is where we can really start to make informed business decisions. However, we are facing a couple of problems. First, when it comes to embedded emissions, we don't have default values yet for the definitive period. And remember, that is starting in January. As for the benchmarks, we literally don't have them yet. They are not published. So the Commission is now saying we will not even get them before the start of CBAM in early 2026. The good news is we know what the phase-in rate is looking like. The EUA price, however, is inherently volatile. So this is also something we know very little about in advance. And finally, the rules on carbon price paid in third countries are simply not here yet. We don't really know what they will look like either. So there is quite a lot of missing information at this stage. I am going to explain each of these points in a bit more detail now. And then Gabriel and Dan will be going into the details of how you can find some solutions for all of this missing data. So let's just start with embedded emissions, because they really drive everything. Do we know what they are today? Well, the answer is partly. Many importers are already collecting this supplier data, but their accuracy clearly varies, and they are not so reliable at this stage. And this is because they will need to be verified in the future. Verification of this data will start in 2027, based on the data you have been collecting in 2026. So if currently your estimates of supplier data values are low or lower than what they should be, and you have no way to know in advance, your costs might rise quite suddenly once the values are verified later down the line. It could also go the other way around, but at the moment, it's hard to tell. So you might be tempted to say, in light of all of this, that supplier data is not reliable at this stage, and so you just want to rely on default values to predict your costs. Well, there's a problem here as well. We do not currently have the list of default values that will be in use starting next January. As I said already, we do have some level of certainty, however, on how they are being calculated and how they will be calculated. What we know so far is that they will be at the country level and at the CN code level. So that will be quite different actually from how they were calculated in the transitional period. They will look quite different. In the transitional period, the default values were based on the highest emitting EU producers, and they were an average of that. In the definitive period, however, they will reflect the worst performing producers per country of origin. And so they are likely to be, in general, higher than what we have been using in the transitional period. Added to this is the fact that products with multiple production routes will see the most emission intensive route assumed for the default value. And on top of this, there will be a markup of up to 30% added to the value, to the emission factor. And that's something we know from sources at the French NCA. These values will also be reviewed from time to time, expect every 2 years, to reflect the changes in carbon intensity. Nevertheless, what you need to know in terms of embedded emissions at this stage is that they are clearly designed to reward the supplier data collection and not the use of default values. They will be designed in a conservative manner. Now, moving on to the next missing piece of the puzzle, the benchmarks. These will not be finalized before Q1 2026. This is public information, and it has already caused quite a lot of rumors on LinkedIn. Why is it that we will not know them before Q1 2026? Because the EU ETS benchmarks on which they depend are still being revised, and so they will not be ready before the ETS benchmarks are public. B, it's because there are actually some key methodological obstacles for the European Commission to overcome. CBAM benchmarks are not the same as ETS benchmarks. They are calculated differently. The ETS benchmarks are actually calculated at the installation level, whereas CBAM benchmarks need to represent the production process, and the different precursors reflect the different emission levels of precursors that go into one CBAM good. And so they are benchmarks at the product level. It would be quite difficult to reconcile. What we know so far is that there will be a provisional list of values for benchmarks that should be published by the end of this month or very soon as part of a draft implementing act. What we expect from this document is that it should outline the methodology behind this puzzle I just explained, how to go from the ETS benchmark to the CBAM benchmark. And we should also see some reference values that are based on the 2021 to 2025 ETS benchmarks. So in other words, the old benchmarks. However, until then, any other values that have been shared publicly that you might have seen online, for instance, are just estimates. They are not reliable values and they are not binding. At this stage, we do not know what the benchmarks values will look like. And we also actually know very little about how the Commission will approach this methodology. What we do know, and what we know from our own sources, is that there are several ideas that the European Commission is testing now. And some of the things that we have heard are around aggregating different ETS benchmark values that would be for the precursors into one same benchmark for each CBAM good. This sounds actually quite difficult because there are not enough ETS benchmark values at the moment to represent all the different precursors that go into a CBAM good. Next would be what we have heard would be adaptable benchmarks. What would be an adaptable benchmark? It would be the idea of representing different product content in different benchmarks. For instance, accounting for the share of scrap in one CBAM good or the amount of nitrogen in fertilizers, and allocating different corresponding emission intensities to come up with one unique benchmark for one product. Kind of like a cooking recipe, actually. Finally, we have heard about a distinction between default and actual benchmarks that would be rewarding the low emission production routes when there is actual data available to prove that this was the route taken to produce the good. If we take the example of steel, for instance, if a company is sourcing steel from EAF but is not able to collect the data and so decides to use default values, the emission intensity that will be applied in the CBAM reporting will be based on blast furnace, so high emission intensity. However, if a company is able to provide evidence that the good was produced using the EAF route, it will be able to use a benchmark based on this production route. So in a nutshell, while we don't have the final numbers yet, we are not able to provide you with this information today. We are starting to understand where this is going. We know that the benchmark system will be complex, it will be data-driven, and it will also be flexible, if not modular. And so companies really need robust data systems to optimize their costs starting next year. Moving on to the easier variable. As I said earlier, this one we know already. It's the phase-in rate of CBAM, which basically mirrors the phase-out rate of free allocations in the ETS. It will run until 2024, and it means that during this period, CBAM will apply only to the portion of emissions that no longer receive free allocations. We can answer questions on that later on, but this is quite straightforward at this stage. So I'll just move to the next variable. Here, we're talking about EUA prices. Well, EUA prices, as I said, are the carbon price in the EU. They just add another layer of uncertainty. And this is because by nature, the carbon price will be volatile, even in 2026 and beyond. But it will also directly influence the cost of CBAM certificates, and so your CBAM cost as a company. Dan will actually cover all of this in more detail and explain what this means for cost planning and hedging strategies for your business. So I will leave that to him later on. To finish on this formula, the carbon price paid. The regulation is already indicating that importers can deduct what is called an effective carbon price paid in the country of origin of the good. However, the definition of what an effective carbon price remains quite unclear at this stage. We have very little information, but here's what we actually know. The Commission will publish a list of recognized carbon pricing systems around the world, and potentially also some default values for price paid per ton of CO2. It is also a possibility that importers will be able to submit their own evidence of a carbon price paid in a jurisdiction of origin, even if this is not part of the list, official list. Again, we don't really know how all of this will play out, and so we are waiting for further guidance. But one pending question that is also quite topical at the moment is whether the rules of origin could affect how these deductions work. Let's say, for instance, that if CBAM is moving to the melt and pour rule to decide on the country of origin, it might change the game in terms of how the carbon price paid abroad is taken into account. I won't go into too much detail here, but very happy to take some questions on that later on. Just because I'm aware of time and we need to move on to the next part, I will just wrap up this part by taking a quick look at timing. I just want to reiterate, I've said different things about timing in the previous slides. We expect to hear from the Commission very soon on the 3 implementing acts that would define most of the variables I've talked about, so default values, benchmarks, and recognition of carbon prices abroad. These are all still very uncertain and will keep causing some uncertainty in the future. But we know that draft texts are expected this week or next, or at least by the end of the month. And there will also be a period of public consultation after that, typically of 4 weeks. What we also know is that the Commission aims to adopt these texts by early December. So this should give you a little bit more visibility, but we also know that there will not be full visibility on the costs themselves before CBAM actually starts. So in light of all of this, companies can actually already take some measures to reduce uncertainty, and I will hand over to Gabriel for more on this.
Thanks very much, Pauline. So in the next section, I'm going to talk about what you can do about some of these uncertainties on embedded emissions and the benchmark, and then Dan is going to take on what we can do about EUA uncertainty. What can you do now in your company? So let's start with the embedded emissions. Here, the advice, once again, next slide, please. Here, the advice once again is, as we have been saying for some time, that you do need to engage with your supply chain and get data from them. Now, that's easier said than done. as we all know, I think many of us in this call are importers, and we have all been working together to try to get the suppliers to understand that it is important for them to provide this data. What I think I'd say now is it's not just important, it's business essential. This is a core number that you are being taxed on in the purchases that you are making, not in the future, but today. So I'm talking today to companies that import goods, typically metal, also fertilizers, cement, other CBAM goods, and they are doing so, they're making those purchases today from Asia. They're 3 to 4 months shipping time. CBAM will apply. How much CBAM is determined by the amount of embedded emissions. So that is essential data. And while we don't know, as Pauline has said, what the default values are for the definitive period, we do know that the default values will always be the most expensive data you can use to run your CBAM process. So, sorry, there was that. Could we put the slides back, please? Thank you. So you need to have an action plan, and specifically start with your biggest suppliers. And when you're engaging with those suppliers, be very clear about what the rules are. Remember, suppliers are only reporting once a year. If some suppliers think that they have to report on a quarterly basis, that's too much work. It's absolutely not necessary. Some suppliers think they have to report on a per product basis. That's not how it works either. The rules are fairly clear and not as complex as some people believe. It is important to get it right with your suppliers. Now, it will be much easier for your suppliers to get this right when they are working with verification companies. And the challenge there is verification does not start until the end of 2026, where it covers the 2026 period, but it will be necessary for them to be verified and be providing you with verified data for that first CBAM report that is due in 2027. The good news here is a lot of companies we talk to who are in the verification world are starting to offer what they call pre-verification. That's a smart choice for you to get clarity on the total cost of buying from your supplier. So if you have a key supplier and they are putting together data and they're not sure, reach out to us and we can connect you with one of these independent, accredited third-party verification companies who can talk to your suppliers and make sure that they are getting this absolutely right and offer them a kind of pre-certification system. Let's now move on to what you can do about the benchmark. So the benchmark has been a major problem for the entire European set of industries that are covered by CBAM. And, you know, it's not our place to be political here. We nonetheless fully understand and frankly share the frustration that that is being, sorry, there's share the frustration that is felt by the European industry on the lack of benchmarks. The reason is that the benchmark number is so hard to pin down and could be so wide in its range as to be very determinative of whether you're paying 25 euros per ton of imports or 100 euros per ton of imports. So we did our best to actually try to get a methodology of our own at CBAMBOO while we wait for the European Commission to come up with their methodology and their numbers. So we've put together a methodology for calculating the benchmark for each particular area, and we've been transparent about the way that that operates. We've actually published it on our website. It's free to read and download, and we're very keen to hear people's feedback. And one thing to be clear about is this is an approximation. It's not a prediction. It's based on the methodology that we use is can we go back one slide? It's based on how closely the ETS benchmarks track a typical installation in each product sector, and it will be updated as future guidance emerges. So you can see on the screen some of the numbers that will come out of that particular system. So for example, iron and steel products, we've got an average benchmark for the one on the top there of 1.38, for the second 1.15, for aluminium 1.63. But we don't claim that these are the actual numbers that are going to be used for the benchmarks. As Pauline has already explained, the actual system will be more varied and more complex and more specific than this. But for the time being, this is the best that we can do, and it's in line with other industry estimates. So as the next slide shows, we've taken those benchmarks and put them into our platform, the CBAMBOO platform. And what is the CBAMBOO platform? Well, it's all about getting you the most accurate and timely estimate of CBAM charges. And that helps you to understand your CBAM costs, not retroactively in 2027, but right now, when you're making those purchases, when you're incurring those CBAM accruals, if you like, with real data for every item that you buy and every item that you ship. And it's a system that is designed around the needs of procurement teams, finance teams, and sales teams at companies for whom CBAM is not just a minor tax, but a major part of their ongoing business. And it incorporates our benchmark methodology, and it will continue to be updated. We have a team of subject matter experts here who are keeping this software fully in line with the regulation at each step. There's one other thing we can talk about before I hand on to Dan. And on the next slide, you can see the what we call this concept of a CBAM working group. And this is something that I recommend that you consider whether it's right and appropriate for your business, particularly if you are in a multinational business with multiple separate teams. The point is that CBAM knots together different groups in surprising ways, and all of these groups need to have access to a common core of data, what we call the carbon ledger for the enterprise. So in the same way that every part of the business has to think about its budget and its finances, the same is actually going to be true of CBAM. Procurement needs to understand about CBAM when they're making purchases. Sales needs to think about CBAM when they're specifying goods for sale. Trade and customs is going to have to manage a lot of the practicality of CBAM. Now, if you've been managing CBAM until now with the mindset of this is a compliance regime, then there has to be a process, I think, of widening that knowledge across the whole organization. And we see this pattern time and again. We work with companies who are pretty sophisticated by this point in their understanding of CBAM. They've attended our webinars, they've gone up the learning curve, and they understand, and there's somebody, a subject matter expert within the organization, who really gets it and has been managing the process up until now. But it's very often one person, typically one very overworked person. So what we do is we help take away that bottleneck and institutionalize the knowledge, share it through the organization, set up a common data system for the whole enterprise, and ensure that procurement, sales, budgeting, trade, all of these different groups are talking the same language. And the result of that, of course, is to make sure that you as a company are aware of your CBAM costs, are able to offset those costs to different players in the chain, and that you do not have any shock bills in 2027 that you cannot pay. So that's the kind of work that we do to take away some of the panic around this process. So now I'm going to move on to if we go to the next slide, to Dan Maleski, who is going to talk to us about the EUA price. Thanks very much.
Excellent. Thank you very much, Gabriel and Pauline. Pauline, can you give me a thumbs up if you can see my slide? Is it sharing? Yes, wonderful, wonderful. Well, hello, everyone. Good morning. It's a pleasure to be here. My name is Dan Maleski. I lead the CBAM hedging team at Redshaw Advisors, where we help companies buy their CBAM certificates and manage that cost a bit more thoroughly. And today we'll be discussing, well, just that topic, right? The financial aspect of the CBAM, how much it's going to cost, why, touching on some of the topics such as Gabriel and Pauline mentioned, EUAs and the EU ETS, CBAM certificate price forecasting, as well as some solutions to manage this cost. Now, the slides will be sent to everyone after, so no need to take notes. Just sit back and relax. I'll try and tell a story today, and hopefully I can help you guide that way. We're going to start with a bit of some background, right? The correlation between CBAM certificates and the EU ETS. Now, I know there's a lot of acronyms flying around right here, so I'll try and keep it quite simple. CBAM certificates are correlated to the price of the EU ETS following a set of methodologies. So in 2026, CBAM certificates will be based on the quarterly average clearing price of the EU ETS auction. So what that means is, well, there's around 52 auctions in every quarter, around 52 auctions. And well, for 2026, the CBAM certificate price will be what the average of that is. The issue is, well, we won't really know that until the end of the quarter, right? And so that does create some headaches, which I'll talk about later on. For 2027, things are going to change. CBAM certificates won't be based on the quarterly average, it'll be based on the weekly average. So it alters slightly, and so just to provide a bit more color on all this, let's say we pick a week in 2027, and in this week, let's say the auction, there's 4 auctions in that week, and the auction clears at 70, 71 euros, 72, and 73 euros. Well, that means that CBAM certificate priced for that week is going to be 71.5. So that's kind of how it works in theory. But when we speak with our clients, often a lot of this is a bit alien to them. Auctions and EUAs. They ask, well, how does this all work really? And so I figured it might be beneficial to put a bit more context on this. So we keep mentioning EUAs. What are they? Well, an EUA is really just the allowance to emit 1 ton of carbon in Europe. And I want you to think about these allowances like a commodity, like you think about gold or oil or steel, right? Because it trades as such. I know carbon's a very intangible subject, it's in the atmosphere, but in Europe, they've commoditized it. So when we talk about EUAs and carbon, I want you to put your commodity lens on. So these EUAs, like any commodity, can be stored. They can be transferred. So I can send 100 EUAs to Gabriel, and Gabriel can send me 100 EUAs. And very importantly, they do not expire. So we have clients that have bought EUAs back in 2014, 2015, who still hold them today. Now, the way you buy these EUAs is you buy them in really 2 forms. You buy them either on the primary market, which is the auctions, right? That's the EU-sanctioned ways the EU actually injects these allowances into the market. Or you can buy them on something called the secondary market, which is an exchange, right? Just how you'd buy an equity or any commodity, LME or anything of that nature, where you go to an exchange. Same thing for carbon. So there's 2 ways. There's the auctions, and then there's these exchanges. So that's how you actually buy them. You typically work with an intermediary, something like Redshaw Advisors, or a company that can actually help you procure them. Now, it's worth to note because these auctions are a bit funny, and that's what CBAM certificates can be based on. Auctions only happen around maybe 3 or 4 times a week. And very importantly, the price of EUAs are not the price of the auction. The auction is just one price discovery point within a day. EUAs trade from 7 a.m. to 5 p.m., right? And so EUAs are constantly trading throughout the day, and the auction might clear at, let's say, 72 euros. But for that day, EUAs could finish the day at 74 euros or 72 euros. And so auctions pricing doesn't equal EU ETS pricing. So take all of that information I just said and keep that in the back of your head. It might not seem relevant now, but in the next, call it 10 minutes, I'll be touching quite a lot on those topics I just mentioned here. And so this is an example of what the auction table looks like. You can see that, happens 3 or 4 times a week. And typically each auction injects around 1 to 1.4 million EUAs into the market, which is not a very liquid format. The secondary market typically trades around 20 million tons of EUAs a day, right? So 1.3 in the auction compared to 20 million. So these markets are vastly different pricing, and quite separate. So with all that being said, it's a good kind of introductory for us to really talk about the EU ETS. And one of the questions I get a lot is, why is the price of carbon in Europe 78? Why isn't it 90? Why isn't it 5 euros? What sets the price of carbon? And so what we're going to briefly touch on is how EUAs trade. And the reason we want to talk about this is because later on we'll be talking about where EUAs are going in the future. And so this is a graph of pricing discovery and pricing traction over the last 10 years. And we're going to walk through some of the main reasons why we've seen upticks or downticks in the market, starting with policy. So this market is based on supply and demand dynamics, and the policy will always impact how many EUAs are being injected in the market or being removed in the market. Now, a good indicator of this was for the first 10 years of this market. There was way too many allowances in this market, and as a result, prices were quite softened. But a policy mechanism was introduced, the MSR, which squeezed the market, took some of that oversupply out. So the takeaway for this, for you guys, is, well, what policy measures are coming in the future to the EU ETS that might squeeze supply just like it did back in 2017, 2018? The next fundamental driver would be the energy complex, and this is primarily one of the main drivers in this market. Now, the reason being is, you have to understand, the main buyer of carbon in Europe is the power sector. Those are the folks who emit the most emissions. And so let's say gas prices are quite low, like they were in 2019 or 2020. The power generators, they will be burning gas instead of coal or lignite because gas is lower, gas is more profitable. So if I'm RWE, the largest utility in Germany, I might have 50 gas-powered generations and maybe 50 coal. And for this case, let's say gas is more profitable, I'm going to be burning gas, not coal. Vice versa, if gas increases in price, well, gas isn't as profitable. So I'm going to be burning my coal and lignite. And because coal is around 2 times more carbon intensive, that means carbon is going to go up. There's more demand for it. And so you have to constantly be watching the energy complex because it's going to be always impacting the price of EUAs. And then the next drivers is something that catches people off guard a lot, which is speculators. So we work with a lot of hedge funds and banks and pension funds who put money into this market looking to profit on it. And so we work with companies, for example, back in around 2020, when we knew EUAs were going to rise, and we had hedge funds, throw 100 million euros into this market, wait 2 years and sold and made a massive profit. And so hedge funds and what we call speculators influence the price of EUAs significantly. Then lastly is industrials, the folks we always think are the ones who actually need these carbon allowances. When industrials are, for example, suffering with macroeconomic issues or high power prices, they typically see demand destruction. And so they potentially see less carbon demand. And what I'm trying to illustrate here is the carbon market is incredibly complex. I'm not even touching the surface of all of the fundamentals here. But this EUA price is constantly moving. And typically, if you're switched on and clever, you should know when it's moving and where. But you need information and you need risk management solutions. And the reason it's so important to know this is because it is an incredibly volatile market. If you know that, let's say, next month we are bearish on EUAs, well, don't buy right now. Wait next month to buy, right? And so if you have that information around you, it's really, really helpful to manage your CBAM exposure. And so with that being said, let's talk about it. Let's talk about CBAM exposure. Where are CBAM certificates trading right now? To answer that question, we'll be looking at an index. We call it the CBAM Certificate Index. This tracks the weekly CBAM price with the idea of, well, if CBAM started right now, what would CBAM certificates be at? And right now, we're actually fairly bullish. In the last few months, we've seen the price of CBAM certificates increase around 5%, predominantly because of investment funds, as well as some macroeconomic tensions releasing. I mean, we had various summits, when Putin went to Alaska, and other geopolitical issues that potentially could be easing. Therefore, we've seen a good amount of upside. And the reason I'm kind of preparing the context for where we are right now is I wanted to show you, we are around 75 to 85 euros. That's where CBAM certificates and EUAs are trading at right now. But in the future, 75 euros is going to seem quite cheap because in the next, call it 80 days, which is when CBAM begins, and especially in Q1, we are very bullish. We are looking at potentially one of the last times in this market where we will be sideways trading for a good amount of time. There will be a significant amount of upside coming to the EU ETS in the coming months. And here's why. The main reason is going to be the market structure itself. Right now, in 2026, we are forecasting there to be an excess of demand of 177 million tons more than the supply. So there's going to be a significant amount of scarcity in this market. And that is going to Scarcity creates a lot more value in that commodity. It's going to drive prices up. The last time this market experienced anything similar to this amount of year-on-year shortfall was in 2021, and we saw EUAs nearly triple in a matter of months. The result of this is those speculators I talked about are putting a lot of money in this market right now. We are fairly close to breaching the record long position in this market. Right now, there's about 6.8 billion euros worth of speculation in this market. And so you have to ask yourself, what do those clever folks, those clever hedge funds and pension funds know that I don't know? Why are they all so bullish? The reason they're bullish is because the structure of this market itself is designed to get more expensive. So this has resulted in a consensus across the board that in the short term, and especially the long term, we are very bullish for this market. How bullish, you might ask? Well, I mentioned earlier, EUAs are trading around 75 to 80 euros right now. We're expecting this year to close, so by Christmas time, for EUAs to potentially be around 82 to 87 euros per ton. And by 2026, which is next year, the average EUA price is going to be around 93 euros. So there might be a few folks on this call who are fairly switched on with the EU ETS and can kind of rationalize those numbers, but there might be some folks who are trying to figure out what all this actually means in practice. And so I thought it might be a bit helpful if I took a step back and left the world of finance and really kind of spoke English here. Let's say I'm on the call and let's say import, 15,000 tons of steel a year, just throwing a number out there. And for argument's sake, let's say I am around the average embedded emissions. So I'm not, super green, I'm not super dirty, I'm right in the middle. How much is this going to cost me next year? So in 80 days, how much are these numbers going to mean? If I take the price we're expecting the year to close at, 82 euros, and I use that price to look to understand how much my CBAM bill will be, I'm looking at a bill of around 900,000 euros in 2026 because of CBAM. Now, if we take the average price we're looking at 2026, which is not 82 euros, it's 92 euros, that goes north of $1 million. And this is in 80 days. So I mentioned earlier, and Gabriel mentioned, what's your strategy? How are you managing this? Just as companies manage their, gas exposure, or they hire Deloitte to help them with, taxes, right? You have to look at CBAM not as a compliance issue, but a significant cost, not coming in a few years from now, coming in 80 days. And so when I share this screen and speak with my clients, a lot of times their next question they ask is, well, Dan, how expensive is these EUAs going to get? How much do I need to budget? And, to answer that question, it'd be really easy for me to go and find a forecast out in the market. I'm sure companies do all the time, but forecasts are always correct. And so to solve that issue, Redshaw Advisors, what we've done is we've actually sourced nearly every reputable forecast on the market. There's around 14 of them that we trust. There's a lot more, but 14 that we think are pretty solid. And we take all of those forecasts from the banks, from the data companies, from the energy companies, and we consolidate it into one line. And what I'm going to show you is that line. It's the market consensus of where EUAs, in this case, CBAM certificates are going. As you can see, they're going in one direction. That direction is up. We're anticipating by 2035 for EUAs to be around 190 euros. But it could get a lot worse. I mentioned there's a lot of discrepancies between these forecasts, and some folks believe an EUA could be 260 euros. Last week, we host the largest carbon markets event in Europe, Carbon Forward, and we had a panel of some of the main forecasters on stage, and our CEO Lewis basically grilled them. He said, justify, why do you think it's going to be at this number? It was quite fun. And what we saw actually was just last week, the analysts kept revising their forecasts to now we're seeing some companies go as high as 320 euros per ton by 2035. That happened last week. And that's a very good example of how quickly these forecasts change. I'm going to show you a forecast right now. In 2 weeks from now, it could be out of date. And so it's really important to keep having the updated information about the market, about the forecast, all of this in one package. It's really, really important. And so if I'm watching this webinar, I might be, okay, CBAM is going to be expensive. It's going to be pretty intense. What can I do about it though, Dan? What are the options I have? And one of the main options among many that we can discuss is hedging. I mentioned EUAs are going to be around 90 euros or 100 euros, but right now they're not. They're 75 euros. So what if I buy a bunch of these EUAs at 75 euros and hold them and use them for my CBAM obligation later? In principle, it sounds like a pretty good idea, but in practice, it's not always the best option. The reason being is because EUAs are an imperfect hedge to CBAM. What does that mean? Well, now we're looking at the secondary market, that market I mentioned that trades from 7 a.m. to 5 p.m. every day. It's a very liquid market. You can buy into it and sell into it very easy. So it'd be a wonderful hedge to actually use this market. The issue is, well, CBAM certificates don't follow this market, the secondary market. They follow the primary market, which is what we're looking at now. And so you can quickly see that what CBAM certificates follow don't correlate to the secondary market. And very importantly, the primary market, the market that CBAM certificates follow, you can't sell into it. So how are you supposed to unwind a hedge on a market you can't sell into? And so this creates a problem because that delta can be quite significant. So the question I ask my clients when they're looking to see what options are available to them, I say, well, how important are margins to you? If I'm a back-to-back steel trader locking my costs in, what happens if you are looking at an increase of 2 to 3% because of how you hedge? And they say that's unacceptable. I can't do that. And I say, okay. And what they say is, I don't want to buy an EUA. I don't want to look into the EU ETS. I'm not exposed to the EU ETS. I'm exposed to CBAM. I don't want a volatile instrument that could go up 3 or 4%. I want a CBAM certificate. And this is along the other common questions and requests we get from our clients. Typically, a lot of them need the ability to lock in their prices. A lot of traders on this call right now, they operate on fairly slim margins, and they're doing back-to-back trades. They have to have price visibility when they're negotiating and price confidence when they custom clear. A lot of companies on this call are probably quite risk adverse to everything I just talked about, the EU ETS, everything about the energy complex and policy changes and the delta between the primary and secondary market. A lot of companies know there's a lot of financial risk involved in that, and they don't really want to try and muddle with it because they're not experts. Some companies don't even have access to buy these EUAs. They never bought them before. And a lot of companies on this call are really good at CBAM compliance, but are really junior at CBAM hedging and EU ETS. And so in response to all of this, Redshaw Advisors has created something called the Virtual CBAM Certificate. And what it is a CBAM certificate. Right now, if a client wants to lock in or hedge their CBAM price, Redshaw Advisors can source a CBAM certificate today in October 2025. And we will deliver a physical CBAM certificate into their CBAM trader portal. So we are literally buying an actual physical CBAM certificate, which will be delivered into your account come 2027 when you have access to the CBAM trader portal. And what this solves is the ability for companies who need to fix their cost. They can do that now. They can lock their cost in perfect. It's a perfect hedge. Everything I talked about before with the delta and the swapping risk between the primary and secondary market, taken care of. You don't have to worry about that. When it comes to short-term risk, i.e. if I'm a trader today looking to custom clear in Q1 2026, negotiating today, I have a solution. You can hedge your risk. Companies can procure on a spot or forward basis. And very importantly, they are exchangeable for CBAM certificates on a one-to-one basis. If you buy 100 virtual CBAM certificates, you will get 100 physical CBAM certificates in your CBAM trader portal. We appreciate a lot of traders don't always know when their goods will custom clear. You might think your steel will custom clear in Q1 2026, but you don't really know because it could get caught up in transit. And so you can roll your hedge forward at no added cost. It's all taken care of, and allowing you to know that there is a complete perfect hedge that exists, that does not expire, that has no extra cost if you need to change the delivery date, and very importantly, it's not an EUA. It's a CBAM certificate. And at the end of the day, even if CBAM goes away, if China invades Taiwan in a year from now and commissions scrap CBAM, your VCC is still safe. We can sell it back at the prevailing market rate, and the cash will be in your bank account by the end of the day. It's very liquid, it's very simple to use, and it's very protected. It does not link to CBAM itself. If CBAM goes away, you are still protected. You have no volume requirements. You can buy 1 VCC or 100,000. And most importantly, we're not a broker. We are looking at providing you a CBAM advisory service. It's not Redshaw brokers, it's Redshaw Advisors. And so we're not looking just to transact an EUA with you. We're looking to provide a strategy to help you to hold your hand. And that's allowing us to help companies manage their risk with CBAM. And if that's something that you'd be keen to discuss with, of course, we'll have a Q&A in a minute. But we're more than happy to have a chat offline to see if the VCC can be useful to companies looking to manage their risk. But with that being said, we have Gabriel and Pauline. I'm sure there's a billion questions in the comments, and I'm sure they're really happy to chat with them. So I'll pass it over to CBAMBOO, who will lead us in the Q&A session.
Thanks, Dan. That was great. Let's move on to the Q&A. We now have 9 minutes left for that. I will just start with, we have selected actually some questions from the Q&A chat, and we will go through them. Again, if your questions are not being addressed, feel free to reach out. Okay. First question, I will just answer that one. Will goods be blocked pending to custom clearance if import is still not registered for CBAM? So this was going to be the case before the omnibus was adopted. According to the omnibus and how it has been amended before it was fully adopted, you will actually have until the 31st of March 2026 now to submit your application for authorization. And so you will be able to import until then. If after then you have not submitted your application, you might be blocked from importing. So that is the most straightforward answer I can provide. And that is all effective. We also know that authorization is not very easy for some countries that are not yet processing applications. If you want some advice on a case-by-case basis for different NCAs, we are happy to help. Please do reach out. Moving on to the second question. I will probably hand that one over to Dan Maleski. Do you want to take it?
Yes. So it's from Opus, Benjamin. Benjamin, by the way, really great work on the safeguard measures. I know you did some phenomenal reporting when it was coming out. I'm pretty sure there's some late nights you stayed up. And so anyone watching this call who is keen to get some information on the recent safeguard measures, Benjamin had some phenomenal research on that. So Benjamin asked, while there does seem to be some increased political will to support European industry lobbying from steelmakers to relax the free allocation wind downing while intensifying CBAM via downstream extensions to go against the mechanism's intended purpose at a replacement carbon leakage protection instrument, how do you expect the Commission to respond to these pressures? Well, it depends on the sector, I'd say. One of the issues that the Commission has is the sectors are not homogeneous in what they're asking for. It's partly why the Commission is having probably a hard time with all these consultations. To give you an example, cement. Cement doesn't necessarily need free allocation because they don't export as much. There's only 2 companies predominantly in Europe that export cement in any high volume compared to metals, aluminium and steel, who do still export a good amount. And so CBAM won't necessarily help all of their issues because if I'm exporting and my export rebate is not strong enough, me as a steel company might lose market share in a different country. Therefore, I might be more interested in receiving free allocation rather than having a full-on CBAM. And so the Commission is having a heck of a time right now with the lobby groups. Maybe that's a question I can take offline to have a bit more of an answer, as I'd probably want to provide a bit more clarity. But yeah, feel free to reach out, and I'm happy to take that and discuss a bit more.
So I'll go to the next question now. Thanks, Dan. The question is, does your IT tool handle imports at an article level? That's from Nora Uhaj at Electrolux. The answer is yes. the CBAMBOO platform is designed to allow you to track each individual item that you are importing, and then marry that up with a CBAM cost and share that knowledge through the organization, both for overall budgeting and for individual procurement making decisions.
Thanks, Gabriel. On to the next question. Do all importers need to apply for the status of CBAM declarant, irrespective of whether their products fall into CBAM scope or not? Question from Olena Mubako at GN Store Nord. Yes. Sorry, the answer is actually you do not need to apply for CBAM declarant status if your products do not fall in the CBAM scope. This is a pretty straightforward answer.
Moving quickly on to the next question that we have on the screen. Can a non-EU importer, indirectly represented by a broker, report their own CBAM account number in the customs declaration? And what happens if the non-EU importer fails to meet their financial obligations? Elmer Speckman, ALS Customs Service, BB. Now, this is a really untested area of the regulation. The regulation is fairly clear about what it says should happen by law. And what it says should happen by law does not fit with sort of what you might think of as typical business practice. By law, the importer of record, if they are a customs broker, is the party that is the CBAM declarant. They are fully liable for CBAM. So they can't then say that these imports are being done by you, by the declarant, by their customer. They have to say that the declaration is from themselves. And so if the non-EU importer fails to meet their financial obligations, there is a real challenge here. If you are an indirect customs broker, and I take it that the question comes from a customs service, you are the one who is legally liable. You will need to build ironclad contractual requirements on your customers if you are doing ICR, and I recommend that those are in place in good time for January the 1st, and it's something that we are also helping with our platform, with the tools that we're building for customs brokers. The ICR relationship is quite challenging, and there's, as far as we can see, all of the legal obligation is on the custom broker, so they need to make absolutely clear that is the case and find a way to offset that with their client so that the financial obligations are always met.
Just because we are running out of time in 2 minutes, I just want to maybe skip 2 questions and go to question number 8. Gabriel, if you want to address that one.
Okay. Isn't it true that the EU companies need to pay tax from 2027 rather than 2026 as part of an EU omnibus deal? This is true, but not the key point. The CBAM, and this also responds in some ways to question 7, CBAM is starting on time on the 1st of January. What has been deferred is the administration for companies in reporting and buying the certificates and surrendering those certificates to the EU. That payment won't be needed till 2027. But let's be very, very clear. When you import goods into the EU in 2026, you will be liable for CBAM from that point onwards. And that has been reiterated in the EU Omnibus deal. All the information we've given you today is fully updated in line with the Omnibus. So there is no delay to the definitive period. The definitive period is going to start in less than 3 months' time. It's been reiterated by the legislation. And those companies, although companies are going to paying the tax in 2027, it applies from the 1st of January 2026. So hopefully we've given you the tools that you need to get ready. But as Pauline has been saying, and as Dan has said as well, we are here to help further. You are welcome to email each of us or go to cbamboo.com/call and book a call with me and my team. And we will be very, very happy to continue answering your questions. Pauline.
Thanks, everyone. With that, we will be wrapping up this session. Thanks, everyone, for attending today. And again, feel free to reach out.
Thank you, everyone. Have a great day. Cheerio.
Thanks.